Hey guys, Mike here. So, oh boy, we got big earnings to get into, and I think I got this formatted to where you actually like it because it's really like quick and precise here, and you get to hear all the juicy details. And obviously things aren't going very well, as you see on the charts there. But I gotta ask, were you guys suspicious of the rally today? Because I know for me, I just feel like we've seen this movie like 2 or 3 times this year where you get this rip your face off rally at some point in time in the day on what I could find to be no news. And I just feel like shorts were just covering for some odd reason or something. It was crazy. But look at when the market turned on, like literally to the cent here. And you can see this is the QQQ, and look at that huge gap up, and then look what happens. It almost comes down to the exact dollar, and then that's the bounce, right? Which just sent us parabolic. And then you go over to the SPY, exact same thing. Gapped up, came down almost to the exact dollar, boom. Took off from there, and on what news, which was some crazy news that came out this morning.
GDP, first look, first quarter, is a nasty minus 1.4. Minus 1.4. We haven't had a minus sign since that nasty second quarter, COVID-related in 2020. Let's go through it. Consumption drops to 2.7, well below expectations. Although sequentially, it's actually higher than last time, which was 2.5. The pricing index, buckle up, 8%. 8%. That is unbelievable. To find a higher number than 8%, you have to go back to 1981.
And I think this report caught everybody off guard, but don't worry, there's a lot of things to do with inventory and export imports that really skewed this. The consumer, which is us, is still spending, okay? And so we'll see, because if you get, guess what, another negative or worse than this the next quarter, that is an official, which most likely would be kind of like a paper recession, as some people like to call it. But don't worry about that. Put that on the back burner. I just thought that was interesting to see the market rally like crazy on that kind of news, which caught everybody off guard. But now, going into the earnings, and if you're getting out of this, guys, please hit that like and subscribe button for me. And let's start off with the big ones, right? Amazon and Apple, and check this chart and this news out of what they reported. And there's Amazon. Oh boy, see you later, bye-bye. And it's down about 9% as I record this, but it was down 12.5. And so the big question is, what the heck happened?
Yeah, Amazon shares are plunging 10%. They're coming back a little bit, though. A net loss of $3.8 billion. The street was expecting a gain. This shouldn't be totally unexpected, though, because that includes a $7.6 billion loss on its stake of Rivian, the electric car company. We saw a similar thing with Ford. Revenue was actually a little bit of a beat, $116.4 billion versus $116.3, which is what the street was expecting. In terms of earnings per share, the street was expecting $8.36. This is a loss, however, of $7.56. Again, I'm not sure if that's comparable because it is a lot of that Rivian stake.
And then we get into Apple, and it's like, oh man, it takes off, it beats. You're like, yes, on top and bottom line, this is fantastic. We got this. And all of a sudden, it just sells off. And I'm sure Apple shareholders are like, what the blank? And so let's see what happened. And boy, I'll tell you what happened right off the bat is Apple said a phrase you just don't say on an earnings call unless you want your stock to go down.
They grew 9% against a 53% comp. The street is looking for 4%. I am bracing for, what do I want to hear on the call? I want to hear that component costs, they're able to manage that with long-term contracts. I am bracing for what he's going to say, what Luca is going to say on the call. I hope that it goes well.
Spoiler alert, it did not.
Given the continued uncertainty around the world in the near term, we're not providing revenue guidance, but we are sharing some directional insights based on the assumption that the COVID-related impacts to our business do not worsen from what we are projecting today for the current quarter. We believe our year-over-year revenue performance during the June quarter will be impacted by a number of factors. Supply constraints caused by COVID-related disruptions and industry-wide silicon shortages are impacting our ability to meet customer demand for our products. We expect these constraints to be in the range of $4 to $8 billion, which is substantially larger than what we experienced during the March quarter.
And so that wasn't good there. And then we go into Roku. This is actually the highlight of the day, right? They end up dropping like 15% right out of the gates, and then it's like a 26% swing right there, as you can see, which is just crazy. So what the heck happened to Roku?
It results from Roku, a little bit of a mixed bag. Earnings missing estimates by 1 penny, coming in at a loss of 19 cents versus the 18-cent loss that was anticipated. Revenues a beat, though, 734 million versus the 718 million that Wall Street expected. Q2 revenue guidance a little bit lighter than expected at 805 million versus the 816 million estimated. But that user number, that all-important user number of active accounts, pretty much right in line with expectations, ending with 61.3 million, the addition of 1.1 million active accounts in the quarter. And Scott, just because we have been talking so much about supply chain disruptions, just want to point out here that they note that ongoing supply chain disruptions contributed to increased U.S. TV prices, resulting in industry-wide TV unit sales that were below 2019, and that their player unit sales remained above the 2019 levels, but were still down 12% year over year. So they are feeling the pinch there as well.
And then we got Intel down 5%. So here comes another tech company with their guidance, and it's the same old, same old.
Now 4%. The company had a 4%. The company had a. He's got shares of Intel down now 4%. The company had a beat on the top line and a beat on the bottom line, 6 cents above EPS. This stock's fallen again, now 4.5% on weak guidance for Q2. Its EPS and revenue guidance just slightly below what the street was expecting. Also, we look at this quarter, while it was a beat on revenue, its biggest segment, client computing, that's chips for PCs for corporate and consumer use, that fell just below estimates. Full year guidance is pretty much in line with estimates, also reaffirming it. But again, that Q2 guidance relatively weak for Intel right now. The PC market overall declining in Q1, down about 7% globally, 17% in the U.S.
And then to top it all off, I don't think anybody's shocked. Robinhood absolutely tanks in after hours, and terrible guidance. It is what it is. I mean, be honest in the comments, was anybody surprised by Robinhood or any of these right here? I was really surprised Roku held up as well as it did, and they did not too bad, but you heard the same old, right? Supply chain issues, demand slowing down, especially for PCs and stuff, which if that happens, I mean, it's going to be obviously a slowdown for other parts that go in those PCs. And so, it just is what it is. Tomorrow's going to be very interesting to see, because sometimes you have these major sell-offs and aftermarkets, and then the next day maybe some news comes out or the institutions just forget, and we continue on rallying up and stuff like that, because we've bounced off that 0 Fibonacci level 4 times now, I believe it is, I think in 2022. And so we'll see if that continues. But understand, if Amazon opens up 10% down, Apple 5% down, these big mega cap stocks down that much, they have so much weight in the indices, and they tend to drag others down with them. It's going to be a very interesting Friday. Plus, it's Friday. Most people traders don't like to hold their stocks over the weekends, because God knows what kind of news can come out. So it's going to be interesting how much selling pressure there is tomorrow. But, we'll see. Maybe we just go right back down and bounce off the 0 Fibonacci level once again. We shall see. So anyway, let me know how you like that format. I figured I could just rip right through them for you so you know what's going on, and kind of catch you up to exactly the big stuff you need to know about these companies and stuff, and what's going to happen in the market tomorrow. So anyway, hit the like, subscribe button if you got anything out of this, and I'll see you guys later.